Hello, everyone. This is Liz from the Real Estate Investor Community. Thanks so much for being here today. I'm going to be joined by Anne Marie from Quest. Let me just pull her up here and we're going to get going soon. But thank you so much for being here. Excited about today's topic, how to thrive with using self-directed IRAs. And I'm so excited to be joined by Anne Marie from Quest and be talking about this really important topic. So in the chat box, as you're joining, please share where you're calling in from. Would love that opportunity to see who's here, where you're calling in from, and just welcome you. So, and what you're excited about learning, because we really want to make your time well spent. That's what we stand for here at the investor community. So Anne-Marie, I'm going to promote you here. So in case there's a problem with your
Hey,
screen.
yes.
How are you?
I'm good. I'm good. It just says it wouldn't let me share my video.
I don't know. I'm getting so confused about Zoom, Anne-Marie. So I'm going to just promote you to a co-host with me.
Sounds great. Happy to be here with you guys.
Are you able to share your screen now?
There
Awesome.
we go. Perfect.
It's so nice to meet you.
Yes, likewise.
I've talked to a lot of your great colleagues. So it's so nice to meet you, and just appreciate Quest support, your support, the team support of our community. And for everyone, Quest is one of our top partners and sponsors and just supporters, and just appreciate that so much. We really thank you for taking care of the women in our community, and thank you for doing what you do, because as someone who's scaled their business in multifamily, I mean, the amount of people that have money in their self-directed IRA that's invested with us, that I've invested with, it's such a powerful tool, hands down, to grow well. So thank you so much for being here, and thanks for all you do.
Yeah, thank you for inviting me. And we're really looking forward to coming out to the big event in just a couple of weeks too.
Yes. If you're coming to InvestorCon, in the chat box, say, I'm excited. So we're coming down to the pike, 2 weeks away, which we just had a almost 2-hour call with our event team today, just getting to the details, and just so much in store for everyone. It's going to be such an amazing few days, real transformational experience. So thanks for all the support. I want to be mindful of everyone's time. And I want Anne-Marie to have the most amount of time to really share what she's here to share. But I want to just welcome everyone here. I have a couple of quick slides here. Just give me a quick second. But yeah, as you're joining us, please in the chat box put where you are calling in from, what you're excited about learning, and that would be wonderful. So let me just share my screen here, and we'll get going here. But thanks for everyone being here. All right. Thank you. All right, I get very technically challenged. Thank God we have AV people going to be there for us in Nevada InvestorCon. So if you're new to our community, just a few quick slides about what we have going on here. If you're new to our community, please put in the chat box new, because I always assume women have been on our journey with us for some time, and I thank you for being here and making time to connect. So we got some new folks. Thanks, Stacy. Awesome. Hey, Azza. It's a pretty name, Azza. Very new and from San Diego. I love San Diego. One of my favorite places, Julia. Cool. Awesome. All right. So our mission statement, and then I'm just going to roll with a few slides and then give you the floor, Anne-Marie. Our mission is to empower women to live a financially free and balanced life on their own terms. We take that very seriously. And our goal is that everyone has the right to not just financial security, but financial abundance. And that's really what we stand for at our community here. What we do is we provide a really intimate global platform where women can really connect in deeper ways and get the community and the confidence that they need, right, to move the needle on their investing journey. If you're not aware, we have a podcast we release twice a week. We have a podcast, it's published by Bigger Pockets. And we release Tuesdays and Fridays. So stay tuned. We're always interviewing women. We're up to 380 episodes. So we got a lot of episodes there. We have always really about taking it to the next level in terms of content and what's happening, out there in the market. We have meetups. If you are not part of a local meetup, these are free groups for you to join. I know, Anne-Marie, you're speaking at a few of them. I'm so excited to hear that. And these are local groups of women coming together to really give and get support from each other. That's what they're there for. That's the purpose of them. And just check those out. If you don't have a location, they're all listed on our website. We're always looking to grow that as well. So if there's not a location in your area, let us know, and look forward to potentially even starting one. We do have a membership. It's a really one of a kind, really membership that's focused on helping women that have experienced, done a few deals, looking to scale their business. And we'll be talking more about that InvestorCon, but that's on our website as well to learn a little more about that exclusive group. Our Facebook group, most of you are aware of, but again, this is a free resource for you to just ask questions, get the support you need, and just, put yourself out there and also help other women, quite honestly. Like, women post about questions. I see Anne-Marie, I see you and your team very active on our Facebook group, and we so appreciate that. And I know the really cool part about Quest is what they stand for is education, because ultimately that's what it's about, right? You're educating people and what they can and can't do, right? Especially when it comes to self-directed IRAs and making sure so it's education. And that's what we stand for, is just educating people. We always have events happening, free events. We have a EXP team as well. And we're investors just like you, in our path. Last thing I want to say is that we literally I think we have a few seats left, or literally a few tickets left, because we're literally have maxed. We've got the entire resort. We've rented out the entire Omni Resort in Scottsdale, and we're almost at max. So it's really exciting. It's coming up in 2 weeks. If you've not gotten your ticket and you've been on the fence, this is the time to get your ticket. And like I said, Quest is one of our key sponsors, not just for InvestorCon, but educational opportunities and events throughout the year. That's really what I'm so excited about working with you guys on. So without further ado, I'm going to give you the floor, Anne-Marie. I'm going to stop talking, stop sharing. And thanks again so much for being here. And I will manage questions. If I can encourage people to put your questions in Q&A, especially with this topic, you're going to have very specific questions. And I know me, I forget them if I don't write them down. So just throw them in the Q&A box. We have a lot of people on this webinar, so the chances of getting to all of them. So if you have a question, I've thrown it as quickly as you could so we can field as many as we can. And I'll probably pop on about quarter of. We'll kind of end on the hour just to be mindful of everyone's time. Does that work for you, Anne-Marie?
That sounds great, Liz.
All right, awesome.
Good deal. We'll go ahead and get started. Well, thank you so much for having me here today, to Liz, and I'm very happy to be with all of you today talking about my most favorite topic, which is self-directed IRAs, but also really financial literacy for women. I saw a statistic the other day, and it talked about the fact that more than half of US women are now out earning their male partners. But what's interesting is just less than about 50 years ago, there were so many things still in kind of the financial space that women were not even able to do. I was looking it up, and less than 50 years ago, it was actually legal for unmarried women to be denied a loan in the US. So it's kind of an incredible shift how far we've come. And I think it's a huge credit to InvestHer, to this community, to be bringing these type of very important topics from finance to investment, education in this specific space. And so I feel really privileged to be part of this group and to be collaborating and bringing some education that hopefully will be valuable for all of you. I'll share my screen so that we can go through a little bit of background on self-directed IRAs and exactly how they work. I do see a couple of questions coming in, so I'll try to address those as we go, but please feel free to include your questions in the chat or the Q&A feature. I want this to be really valuable for you. And at the end, if there's something that we weren't able to get to, or maybe you have a really specific question based on your situation, I'll have contact information at the end, as well as a QR code where you'll be able to scan and directly set up a meeting so that we can explore a little bit further. Now, talking about self-direct, did you have something, Liz, before I go on?
I see a question in here, and maybe
Sure.
I feel like everyone knows who Quest is, but if you, and I'm sure you're going to talk about what you guys do, but it might be helpful just to do that as we jump in. But I'll stop talking.
No, no, all good. Yeah, I will talk a little bit about who we are at Quest, but at the 30,000-foot view, we're basically a self-directed IRA provider. You've probably heard the term self-directed, but there's a little bit of mysticism and I think some misconceptions that surround exactly what these accounts are and how they function. But they really are a vehicle for creating tax-free retirement for yourself. And importantly, it's also going to give you the capability to be able to choose all of your own investments in things outside of the typical stocks or mutual funds that most of us are investing into. A little bit about me before we get started. I've been with Quest for over 10 years now. As I said, self-directed IRAs and investing is a topic that I find very interesting. I got started in the industry when I was relatively young, and it's really given me such an opportunity to surround myself with people that are much more knowledgeable than I in investing and really be able to leverage that experience, specifically in a self-directed IRA myself with my own investments, and be able to start preparing for my retirement completely tax-free. So a lot of what I do here at Quest now is I lead our sales and marketing and business development efforts here internally, but I also do a lot of public speaking on these different topics. As I said, I have done some investing myself. Myself and my husband, we are both very busy. We both have jobs where we're traveling frequently. I also have a 6-month, almost 7th month old son. And so just with our lifestyle, while we understand the value of real estate, being very active in real estate just is not a fit based on our corporate jobs that we have, based on our family at this point. However, the beauty of this industry is that there's really something for everyone. And so for us, we are heavily involved in investing, but more in a passive capacity. So we've done a lot of note investing, private lending, and more recently, and maybe this is just the proximity to these style of investments, be it that I'm based in Houston, Texas. We've also kind of started dabbling a little bit into some passive oil and gas investments as well. So a little bit of a mixed bag, but do have the opportunity to see thousands and thousands of transactions here at Quest. And so kind of sky's the limit. For us, passive investing is something that works really well for our lifestyle. And I know that's popular for many people, but if you are an active investor and you want to be the landlord or you want to do a flip, all those different types of investments are certainly possible. And we'll talk about that today as well. Now, who are we at Quest? As I mentioned, we are a self-directed IRA custodian. We're the largest in Texas, though we have clients across the country in all 50 states. We are celebrating our 20-year anniversary this year. We opened our doors in 2003. And so we've been doing self-direction for a very, very long time. The founders of Quest, the owners of the company, they are both investors themselves, as are many of our staff here. And so we're constantly shaping everything that we do as an organization, really with the mindset of what an investor truly needs. And so with the $3 billion that we have under management here at Quest, we're also very proud of the customer service that we bring, as well as how quickly that we can do investing as well. We're the fastest in the industry and able to process the investments within 24 to 48 hours. So like I said, we are investors ourselves, and we understand that often in real estate, you have to be able to move fairly quickly and take action. And so that's something that we've really incorporated into the company and the way that we operate. Now, our disclaimer at Quest is that we don't provide any tax, legal, or investment advice. Basically, everything I'm going to talk about today is just for education purposes. We always encourage to consult with your power team. your attorneys, your accountants, your advisors before entering into any type of transaction. And of course, we talk a lot about the importance of due diligence before you enter into any type of deal. So we'll cover what exactly a self-directed IRA is, how is it different, and then we'll dive into some of the accounts that are out there. A lot of times people will think self-directed IRA, there's just one specific type. There's actually a lot of different accounts that you can be self-directing into alternative assets like real estate, like private companies, like notes, like oil and gas, and many other things that are possible. And then we'll bring it home by showing you some real case studies where people have used their self-directed IRAs to be able to invest in real estate and other alternative assets. And then we'll close it out with some contact information and where you can learn more. We've got lots of great free events that are both in person and live, depending on where you're located. So we'd love to have you guys come out to some of those in the future. So self-directed IRA. What exactly is it? What makes it different than some of the other retirement accounts that are out there? It's kind of funny, and I always like to tell this story because I think it speaks to the kind of mysticism or the misconceptions or confusion really that surrounds these types of accounts. We have offices throughout Texas. And so, sometimes we'll have people come into the office and they'll sit down with us and do an in-person consultation, and they'll move forward and decide to set up the account with us. And as they're completing the application, they'll kind of look up and they're like, well, hold on a minute. I might have the wrong application for my account here. And, we'll ask them, well, what do you mean? And they'll say, well, this says traditional IRA or Roth IRA or SEP IRA, but I'm looking for a self-directed IRA. I always like to tell that story because I think it demonstrates the confusion that's around these types of accounts. Self-directed really is just a marketing term. It's just trying to connotate that you, as the owner of the account, are self-directing it, right? You're the one that's choosing the investments in there. But if you did some not so light reading and you went and you looked up Internal Revenue Code or you look up IRS publications, the interesting thing that you're going to find is you're not going to find information about specifically self-directed IRAs, because again, self-directed is just a marketing term. We like to say that an IRA is an IRA is an IRA. The difference isn't actually in the accounts themselves. So, for example, if you already have an IRA at a company, the account that you would set up at Quest is exactly the same. All the rules that you might already be familiar with, all of the tax advantages, those are all exactly the same. So why is it that the IRA that you currently have, maybe at kind of your traditional style company, maybe a Fidelity, a Charles Schwab, Edward Jones, right? Why can you not take that style of account and invest it into real estate or notes or some other type of alternative investment? The reason is not because the account is different. The reason is that the companies are allowing you to invest into different things. So we'll use me, for example. I have an account with Quest, but I also have an account over at Fidelity. And I do your typical things, right? Stocks or mutual funds, a whole variety of investments. At Fidelity, I am exclusively limited to investing in publicly traded investments. Fidelity's job is to sell me a publicly traded investment. So stocks, bonds, mutual funds, CDs, annuities, right? These are all of the things in the publicly traded space. The majority of companies out there and the way that the majority of Americans are investing is in these types of assets. And so because the big companies that are out there only deal in publicly traded, it's a very small amount of people that sometimes even realize that there are options in the alternative space. So again, the accounts are the same. It's what the companies are going to allow you to do with those accounts is different. So by using a company like Quest, you have the ability to truly self-direct it into what's considered an alternative or a private investment. Now, there's a lot of great benefits for these types of accounts. The first one being diversification. A lot of times people will come to us and say, well, I'm fairly diversified. I've got a variety of different stocks. I've got some kind of more fixed return investments, like maybe some bonds or like annuities, and they name a few different things. In our opinion at Quest, you absolutely want to have some publicly traded investments. We're not saying cash out, your IRA from Charles Schwab and put all of it over here at Quest. We think you should have your foot in both. But in order to be really truly diversified, you'll want to have your publicly traded investments and have your maybe more tangible assets, something like real estate, something like, in the alternative space, like a private company, like a note secured by real estate, maybe a syndication, like Liz mentioned. That's going to allow you to really have your foot in both sides and get that true diversification. The next big benefit is the tax savings. If you use a self-directed IRA and you direct it to purchase a piece of real estate, or you direct it to participate in a syndicated multifamily deal, for example, as you start generating income and profits back from those investments, they return right back into the self-directed account, and they're growing in either a tax deferred or completely tax-free manner. So there's a lot of advantages when we're talking about it from the standpoint of your investment returns. But in addition to that, something that a lot of people don't even think about, we just had tax season. When you're making deposits into some of these accounts, you can actually reduce your personal taxes as well. And even beyond that, there's accounts that you can be using for your kids' education, as well as your family's health expenses, where you can immediately use them. It's not for retirement, it's for today, completely tax-free, just by doing investments in these types of alternative assets. So there's a lot of different tax advantages that are out there with these types of accounts. Social investing is something that I love to talk about. You can absolutely invest in maybe a mutual fund, I don't know, investor funds in S&P 500, and you can certainly make a great return. But there's something to be said when you go out there and you're investing locally, you're investing in your community. For me, I know I always feel really good when I'm investing and I can see the benefit of my investment. So an investment that I recently did was I lent funds to an investor, and I'm getting a nice return from it. And that investor turned around and he was able to flip a property with my funds. And he ended up selling that property to a family in the area. They've moved in, they have a young child, they're going to send their kid to school down the street, they're going to support local businesses and stimulate the local economy. And I can drive by that property that I lent the funds to this investor for and see that it was an eyesore in the neighborhood, and it's now fixed up and there's a happy family living in there. So I think there's really something to be said for being able to make money. We're all capitalists. We want to make money. We want to do it as quickly as we can. But I feel really good when I come away from it that I've made a nice profit, but I've also really made a positive social impact as well. And last but not least is with self-directed IRAs, you have the ability to invest in what you know best. So I like to think that when you're investing in something that you know, something that you understand, maybe something that you have expertise in, if you're already investing in something like real estate, I think your chances of being successful and making a good return, they've got to be higher than just putting your funds with a financial advisor or hoping to, ride the ups and downs of the stock market. There are a lot of different accounts that can be self-directed. There's personal plans like the traditional and Roth accounts, employer plans, SEP Simple Solo 401k, and also special plans like a health savings account or an education savings account. Personal plans are very common if you've already got an IRA, or if maybe you have a retirement account from a previous job. If you're currently still working and maybe you have a 401k or you have a pension or 403b or thrift savings plan or teacher retirement plan, right? You name it. Any type of plan where you're still currently employed, chances are you're not going to be able to move those over. It's possible. It's worth checking out. If you wanted to double check, call your custodian that holds your work plan and ask them if you can do an in-service rollover. Now, I saw a couple questions in the Q&A section. If I have a 401k from an old employer, can I self-direct that? The answer is yes, absolutely you can. If you've got a retirement plan from a previous job, you are definitely eligible to move those over into something like a traditional IRA or a Roth IRA. Or if you've already got an IRA, then you can easily transfer that over and start self-directing it. I won't spend too much time talking on the specific advantages in this class, just for the sake of time, but we do have a class where we go very in depth about the tax advantages to the traditional versus the Roth, and there are so many to talk about. But these are really popular plans. And if you don't already have a retirement account, you're thinking, well, I don't have a plan from a prior job, but I know that I need one. Let's talk after the webinar today. You'll be able to scan the QR code. Let's set up a consultation together and walk through your personal situation and which one could be a good option for you. If you fall into the category of being self-employed, then SEP, simple or solo 401k, these can be great options for you. They're going to allow you to shovel a bunch of money in an annual basis and get tax advantages for your small business as well. So kind of twofold benefits there. And of course, your profits are being deferred of tax. So let's talk if those specifically could be a benefit for you. And then lastly, specialty plans are health savings account and Coverdell education savings account. These are the accounts that I referenced where you're able to use the funds today. With traditionals, with Roths, with the employer plans, they are retirement accounts. So it's typically a little bit more of a long-term play. You are doing investments in this type of account, you're generating profits, and they're accumulating tax-free or tax deferred in this account. And that's your nest egg for the future in your retirement. But the specialty plans can be really a great thing to have in your tool belt that you can use today. Health savings accounts are designed for you to pay for all of your medical expenses, from the small things like, Tylenol, to the big expenses like a surgery. And the Coverdell education account is a vehicle where you can save for your children's education that can be used from birth all the way till age 30 for them. So a lot of times clients will come over to us because they've got an old 401k and they'll start investing, and then they'll realize the benefits of some of the other accounts and they'll start to establish more of them. Because one of the things that people don't realize is that you can actually partner all of those accounts together. So for example, let's say you've got an IRA, you could certainly use that IRA and go out and just by yourself, you could buy a piece of real estate as an example. But let's say that maybe you didn't have all the money that you needed in your IRA, but maybe your spouse has a little bit of money in their account, or your parents or your children, or you've got a variety of different accounts. You can actually be essentially pooling all of that money together, investing it, and then having money funneling back for those different purposes. For me, that's been something that's worked really nicely. Because I've worked at Quest, I've had a health savings account that I've invested in alongside my Roth IRA, some of my husband's accounts as well. And so for us, that's worked really well because we've got some money coming back for our future, for our retirement. And then we've also got some money coming back for our health expenses. That was something that we were able to draw on. As I mentioned, I have a young son. He's about 7 months old. But when I was going through my pregnancy and going through, all the doctor's appointments that you have to go to, and then of course, ultimately having the baby, it's no cheap thing to do. When all those medical expenses were coming in, we didn't have to think about, okay, well, we'll pay this from the savings account or the checking account. We didn't need to think about any of that. We were able to take tax-free distributions from the health savings account because of all those deals that we had done over the last 10 years. So again, there's a lot of different options that you have in self-direction. There's no one size fits all. And that's why it can be really a good option to sit down and talk together through your situation and see what could be a good fit for you. When you're investing in these types of accounts, remember that it's the IRA itself that's actually taking title to the investment. So just like you can go out and buy a piece of real estate, or you personally could lend funds to someone or invest in a private company, or do a syndicated deal, or invest in a tax lien, all sorts of different things. Just like you can do that, so can your retirement account. And so when you're doing these investments, your IRA actually is the owner of the asset. And so, for example, just to keep it really simple, let's say you were going to buy a property with your IRA, the actual buyer on the contract would show Quest Trust Company for the benefit of your first and last name and your account number. So your IRA is the owner, and in return, your IRA receives the funds, again, tax-free. Now, alternatively, if you went the route of partnering, like the scenario that I mentioned, where you can pool multiple different accounts together of multiple different people, that would be the example here with the partnered vesting. This one shows 50-50, but it actually doesn't have to be that way. I've done an investment where there were like 8 different IRAs of myself and some of my family and friends, and we all partnered together on a big deal. So obviously that was not 50-50. Each person had a little percentage of the pie. So that's just kind of for the sake of the example. So I've mentioned some of the things that you can invest into with these types of accounts, but things like real estate, land, we see commercial deals, multifamily options, all sorts of different things, all different types of private companies, from some doing real estate development or multifamily deals, to some investing in oil and gas, to tech. We see cryptocurrency, we see promissory notes, you name it, we've probably seen it. There's all different types of investments that you can do inside of these accounts. But of course, we love to talk about real estate because that's something that, we know and we understand, and really somewhere that you can have such an exponential amount of growth for your retirement account. So let's talk about some real case studies to really bring it home so you guys can see how this works. The first one, we'll talk about buying residential real estate. It was a fix and flip deal, multifamily syndication, lending some private money, and lastly, investing in a private company. So there was, really rundown property, but good bones that this client found. Now, they did a conversion from their 401k into a Roth IRA. I'll preface this story by saying that the client could have done this investment in a traditional IRA. They could move the 401k to a self-directed traditional IRA with Quest, and they could have done the investment in that account. Would have been great, no tax implications at all. When the client made their money back after selling the property, and they flipped it and they sold it, and now they've made the money back, the money would come back into the traditional IRA, and it is not taxable. There is no tax on it. But remember, traditional IRAs are called tax deferred. What does deferred mean? Well, it just means it's pushed off to the future. So the mindset with a traditional IRA is that you're deferring your taxation to the future. The idea is that if I defer it long enough until I'm in my retirement years and I'm no longer working, theoretically, my tax bracket will have gone down and I'm paying less in taxes. Now, that's worked for a lot of people for a very long time. But sometimes Roth conversions can be advantageous for people. The reason is that, yes, if you converted your 401k into a Roth IRA, if you did this, you would pay tax on the $150,000 that you converted over. However, the profits off of this investment, again, would go back into the Roth IRA in this example. However, they would be completely tax-free and rinse and repeat. So effectively what you're doing is you're paying the tax up front for the benefit of never paying tax again. So let's walk through the investment. So the client decided that they thought this was going to be a really good deal. So rather than do the investment in a traditional IRA, they made the decision to convert into a Roth IRA in January of 2016, $150,000. They purchased the property for 101. They rehabbed it, and then they sold it later that year for 239,000. So the profit after the sales and the holding cost ended up being a 72% return on investment. It was 94,000. That 94,000 is completely tax-free. So now in the Roth IRA, the client has the initial 150 plus the 94,000 that they've made. They can continue to reinvest, and all future profits will be completely tax-free to them. Now, on the upfront, they did have to pay tax on the 150,000. However, they didn't have to actually pay it at the time they did the conversion. If you see here, they did the conversion in January of 2016. Well, when do you file your taxes? Well, you file your taxes typically the following April. So for this client, they did not pay the taxes on the 150 until April of 2017. So it gave them about a year and a little bit less than a year and a half where they were able to go out and do investments to make it advantageous, make it worth it for them. Now, for this client, this made sense for them. One thing I like to impress upon you is that you don't have to convert your full account balance, and you probably shouldn't. It just depends on your personal situation. It's something we should talk about, and it's something you should consult with your CPA on. So for example, if you've got a $500,000 401k, if you converted all of that over, that's going to be a pretty big tax hit in 1 year. Perhaps a better strategy for you would be to segment the account and just choose a portion of it. Maybe you convert 50,000 or I don't know, 25,000, 100,000, right? Just depending on your personal situation, and convert that. And maybe next year you convert a little bit more and a little bit more and a little bit more, and you segment it over multiple years so you're not taking a big tax hit in 1 year. This is the kind of thing that we can talk about in our consultation. And of course, again, is something great to talk about with your CPA. For me, I am a big proponent of Roth IRAs, especially for this community. Believe it or not, it's the most popular account that we hold at Quest, just because people want to invest in things like real estate or multifamily or all different types of deals. And the potential growth that they can have in their account is worth it to them to pay tax on the upfront, even if they're separating that out over multiple years, because the amount of returns that they can make over a long period is just much more worth it to them. Talking about the next case study, we'll try to go through these quickly so we have plenty of time for questions. This client, sorry, this is a little hard to read here, but this client invested into basically they found a multifamily property, a little bit of a smaller property. They placed it under contract for 2.4, just a few doors. And through their network that they had here at Quest, they located 8 investors who were able to fund the deal with a little bit of a combination of some personal funds and, of course, self-directed IRAs. And so James invested $150,000 of his own funds for the down payment, and then was able to obtain a loan. Again, he had some of the self-directed IRAs invested, some of his money, and obtained a loan, and then was able to purchase the property. So by doing this deal, not only has he created cash flow for himself and for his investors, but also has some good equity in the deal. So it'll be interesting to see how this one ends up, but this is a really common type of investment that we see here at Quest. This one is partnering in seller financing. This is actually one of the deals that I recently have done. So had a little bit of money freed up from a previous deal in my Roth IRA. And so myself and one of my friends, we partnered together on this beautiful property that you see here. We knew an investor locally that needed about 30K for the deal. So the two of us partnered together, 15,000 from my Roth and 15,000 from her Roth. And we had our attorney draft the document. We had a first lien position. So should anything have gone wrong and our borrower was not able to pay back, we felt really confident that we would have recourse and be able to take ownership of the property. But it was a nice passive return, 10%, 24 months, kind of quick and easy, as they say, mailbox money. So he was able to fix it up, super budget type of deal. The property was purchased for such a minimal amount. It was in a really small town right on the border between Texas and Louisiana, really rural, really small town. So I was able to pick it up for a steal. But the after repair value was 70K. So definitely a good deal. And so this investor was able to buy the property, fix it up a little bit, and found a potential buyer for the property. So here's what it looks like after. Got a nice little fresh coat of paint and some nice shutters and whatnot on the outside. But the investor turned around and was able to seller finance this to an individual that didn't have the capability of going through a traditional means of financing for a variety of different reasons. But, they were really looking for the American dream, right? They were looking for the capacity to own a home eventually. They had some steady income, though they were on the lower income side. And so they weren't able to qualify for a traditional bank loan. That being said, they have been a really reliable tenant in this property, and one day they will have the ability to own this property in the future. So for us, it's a really simple deal. It's $250 a month back into each of our IRAs. We really do nothing except collect the monthly checks, but we've been able to provide funds to an investor. So, that's his livelihood. He's making money off of it. We have been able to fix up a property that was, truly so run down and really an eyesore in the community. That's been nicely fixed up. And now we've got somebody in the property, giving them the potential to own real estate and stimulate the local economy. So again, kind of goes back to that social impact that you can really have in real estate. And the last one is, again, another one that we recently did in an oil and gas private company. So my husband works in healthcare. And so, the last few years after COVID has really been an interesting time. And his industry, of course, has boomed more than it has in a very long time. And so he had an opportunity to transition into a different company. And what happens is once you move into a different company or you retire or you quit your job or, for whatever reason, you're not at that job any longer, your 401k now has the ability to be moved to a new 401k or could be moved to something like a self-directed IRA. And so we decided that we would move just a little bit of his 401k money over into Quest, some of it into his new work 401k. And we were able to partner about $12,000 in his self-directed account here, along with some of our personal funds. And we did a 50K loan to a private company that is doing oil investing, new and also trying to get old oil wells back operational right on the border between Colorado and Utah. Again, this is a nice passive return for us. It was 3 years, 12% return. And I like to show this one. It's a good, nice passive return that we're making, 18K in 3 years. with some of that cash flow that's coming back to us personally. And while we may pay taxes on that, that's something that we can use right away. We can use that and reinvest it. We could use it and pay for our son's school. We could use it and go on a family trip, right? We can use that money right away today. But because we partnered with our IRA, the other piece of it is going back to our IRA and it's growing in there tax-free. And we will have that in the future when we retire. So just an example of something that you guys can do in terms of partnering together. So Quest, we're great at helping you be able to grow your wealth tax-free. We've got so much education to help keep you on course and keep you learning more about how you can self-direct and take advantage of the many opportunities in the industry. There's lots of networking events. And of course, as I mentioned, we've got fast and friendly service with no expedited fees. So, special offer for you guys is really, we'd love to sit down and have a free consultation with you. It's really a no strings attached kind of thing. It's just for your benefit that we'll walk through your situation, what accounts that you have, maybe what deals that you're doing, and try to identify how we can help and be a resource to you. And of course, for those of you that have been on today, I really, really appreciate you joining me and would be happy to take care of waiving your account opening fee. So you can scan the QR code that you're seeing here, and you'll be able to set up a invite on Calendly so that you can schedule a consultation with us. We've also got lots of classes coming up, and this is the QR code, and we created a special email for you guys as well. It's investher@questtrust.com. That one will come right directly to me and a handful of other ladies here. So feel free to contact us here at Quest.
I love it. So we only have 18 questions to run through, Anne-Marie. Are you ready for the fire round?
Let's do it.
So, and just, if you don't mind, do you mind popping in the email into the chat box? So for the technically challenged people, or, I don't know, I feel like I'm always technically challenged on anything. Just throw that in the chat box so everyone can access that. And just to reiterate, folks, the team at Quest is so service oriented and helpful, and you will get that from them. So I just want to reiterate from my own experience with you folks. So, all right, let's get through some questions here, because it can be, I feel like with this topic, I don't know about you, Anne-Marie, you talk to your neighbor and they'll tell you one thing, and then they're like, and then you'll talk to a professional at Quest and they're like, that's not true, actually. So this is really something you have to be right on, especially when you're dealing with your self-directed. Don't just listen to your neighbors or people that think they know what they're talking about. All right.
Sure.
So this is someone anonymous. If you have a 401k and you're ready to move from an employer account, can you split between an SCIRA and an existing regular custodial IRA?
Yeah, absolutely. You can. So that would be kind of like the example that I mentioned with my husband. We moved a little piece of his into an IRA. We moved a little piece of that into the 401k. So you kind of have a few different options that you can go there.
Awesome. That's a good question. Curious. Thanks, Catherine, for asking. You're curious about the difference between a checkbook LLC Roth IRA and an individual Roth IRA. So what's the difference between those two?
Yeah, so we should definitely set up a time to talk, because we could probably spend the next 15 minutes answering this one specifically, but just really, really high level. Basically, Roth IRA is what we would have talked about today. Checkbook is essentially one of the methods that you could potentially use in terms of investing the account itself. So in the examples we talked about today, I gave an example where you would be directly investing your IRA. Your IRA is taking title to something. In comparison, you do have the capacity to invest your IRA into an LLC. Checkbook control IRAs are out there. There's lots of companies that offer them. I will say that there's been a lot of IRS scrutiny. There's been recent court cases where individuals investing in these style of accounts are actually losing to the IRS. And we tend to take a little bit more conservative approach in our interpretation of the law. I'd love to get into that more with you. I can send you the court cases. We can go more in depth about it. It's out there, but there's a lot of risks associated with it. And the risks can be that you subject your IRA to possibly being distributable. To me, that's not worth the risk. So I'd love to chat with you more a little bit about that, but yeah, feel free to schedule a consultation.
All right. That's awesome. The, I think this is probably what you just answered, but Jenny's asking, she's no longer with a company with the 401k. I used half of it toward a home loan previously. Can I move the other half to self-directed, or do I have to pay off the loan first to move it?
So if you've taken a loan from your 401k, more than likely you're going to have to pay it back, but it's possible that you might be able to access it.
Got it. That could be like, need a little more information. Yeah.
Yeah.
Nancy's asking, providers of non-course loans, tax advantages, we take just disbursements, and how to handle the equity within the holding. With banks crashing, are these entities secure?
Yeah. We actually just had a class that we taught yesterday, and I know it's very timely with obviously Monday, another bank collapsing. If you send me an email, I'd be happy to send you the webinar with that, where we're kind of talking about some of the implications and some of the things that we think may be happening. There certainly are big and small non-recourse companies out there. Hard to say, right? Sometimes it's hard to know the inner workings of what's going on. But there are certainly some very large established companies out there that are pretty well known. One of them being NASB. So do your due diligence, but
yeah, something to be mindful of, right?
Mm-hmm.
All right. We kind of answered that. What about a rollover IRA? Is that eligible, or do I need to transfer it into a Roth traditional IRA?
Yeah, great question. Rollover IRA is really an industry term that just means that you've probably moved like an old 401k or old retirement account from your job into an IRA. So they've coined the term rollover IRA. Typically, these are going to be pre-tax accounts or be the same thing as a traditional IRA, meaning that if you moved it over here to Quest to a self-directed traditional, you could easily do that. No tax implications for doing so. And in fact, Quest does all the legwork for you once you're ready, which is a free service that we offer to our clients. So you just let us know when you're ready and we'll help you to get the funds moved over.
I saw this earlier, and I think this is a great question too, about there's two things that people care about, right? When they work with a self-directed IRA, it's like, obviously cost is one thing, but the speed at which they move. Obviously right now, in any time, I've been investing for 17 years. So there's different times of the cycle, right? But right now, especially with different opportunities, it's still competitive. There's still multiple offers, whether it's single family or a large multi. There's still a competitiveness to getting a deal underway and under contract. So speed is important. And I know a lot of people get frustrated with because there's a lot of custodians out there, not all created equal. And that tends to be a differentiator, right? So just share with us a little bit about your philosophy on that. Obviously, cost of anything is important, but in a lot of ways, investors, I don't know if anyone would agree with me, speed actually is more helpful because you could lose an opportunity. You can lose the property, right? You lose the fees tend to, kind of work out themselves. So curious to get your sense of how you kind of, philosophically, how you approach the speed at which you guys move. And because I know that's a big concern for a lot of investors.
Yeah. As I mentioned, we're really proud of the fact that we are the fastest in the industry with being able to process investments within 24 to 48 hours.
Right.
We are not the biggest company out there, and we think that's a great selling point for us. We are really proud of the customer service that we offer here. It's a little bit more of a boutique style experience when you call Quest. Like if we've built a relationship, you can get me on the phone. I might know your situation, or maybe there's someone else on the team, right? But you're able to get that person again. and build that relationship with them. You're not calling an automated line and, pressing 2 and having to explain every single thing to that person. And I think that that is really invaluable. But, if you're the type of person that you're like, I want to log on, I want to upload my docs, let's get this done, I don't want to pick up the phone and call somebody or come in, we've got that too. So we're kind of the best of both worlds in that regard.
And that's, in working with so many folks that have self-directed and my own, it's just, that's worth its weight in gold. It's really, really important. So this is a detailed question. I think it's Joni. Thanks for asking it. What is the detailed procedure for utilizing a self-directed IRA when you find a property?
So what we could do is, if we set up a consultation, I can really walk you through it in depth. But we also, on our website, which is questtrust.com, have a lot of resources on there based on the specific investment that you are looking for, from webinars to blog posts to actual pages on our site where you can select, hey, I'm interested in real estate, or I'm interested in, private entity type of deals. And it'll walk you through exactly the documentation that's needed, exactly what the process looks like, very in depth.
Kind of answered that one, just looking through here. This is an interesting, are self-directed IRAs also limited to a max yearly contribution of $6,500? And is that limit per IRA account or across all types of IRA accounts? It's a good question.
Yeah, good question, Ramona. So you are limited to your personal contributions, or basically your personal deposits that you make each year. However, if you've already got a retirement account, you can move over unlimited amounts of that. And in your investment returns, you can make unlimited amounts. You're only limited to what you personally deposit each year. If we're talking about a traditional or like a Roth IRA, that 6,500 amount is correct. Unless you're over 50, then it bumps up to 7,500. But that is inclusive for all of your accounts.
Makes sense. Does financing a property, okay. Does financing a property through a self-directed IRA differ from financing with other assets?
Yes, it can differ, specifically because you're using like a non-recourse loan. And so, you're not like making a personal guarantee. It's not a loan to you, it's a loan to the IRA. Quest is the, signer on it. So there are some differences for sure. Again, I know I keep coming back to what we've got on our website and our education, but we do have a lot of resources about what that would look like as well on there that you can check out.
Awesome. Sheila, this is a good question. And someone's asking about how do you expose yourself to different types of passive investments? Because I think that's also a very big challenge for active investors that their money is just literally sitting right now, not working because they can't get into some active investments for a lot of different reasons, interest rates are just being outbid. So a lot of folks that are active are okay, for the time being, I'm going to convert some of that money to passive opportunities. I know that's so many of the women in our community and Strive, that's a lot of the conversations we're having. So how can they expose themselves? And I know that you guys have so many cool events to kind of connect, right? Active and passive, which is wonderful. How would you say that they can expose themselves to different passive opportunities and connect with this oil and gas company that you referred to?
Yeah, for sure. So I think the best way to get out there and find these types of deals is through networking and educational opportunities. We do have a variety of in-person things that we do if you're based in the Texas area, but we also do have a national networking online event that we do on a monthly basis where we come on as a group. People are able to actually pitch their deals on there. We break into small groups where you're able to talk a little bit more intimately with one another. That's a great resource. Local RIAs, local Invest Her chapters. These are all great opportunities where you can go out and find deals. And if you happen to be going to the conference in a couple weeks, please feel free to stop by. I can definitely point you in the right direction for some resources.
I always say that, a lot of people that are active investors that are looking for passive investors forget how powerful groups and events that self-directed IRA companies are hosting, because these are literally people who have self-directed IRA accounts who have to invest in something besides their own deals, like literally. So they're looking for you. And that's why I think what you put on is so powerful, because the different events, we have found so many of our personal 400 investors in our own deals with our syndications at DeRosa at events. I know my husband and I have both spoken, at many of the Quest events, and it's just been great because it's a win-win, and it should be a win-win. It should never be a win-lose. So I think that questions will keep coming. I want to be really mindful. We like to start on time. We like to end on time. Anne Marie and her team at Quest are not going anywhere. They have been such a great support to us so far. I know they'll continue to be so. So definitely check out the QR code. These folks will help you whether or not you open an account with them or not. That's what I mean. They're just really great people and great resource and knowledgeable. So connect with them. Anne Marie and her team will be there in a couple of weeks. So if you're not joining us, get a ticket. Come on. What are you waiting for? It's going to be a transformational couple of days. And we have such amazing companies like Quest there to help and be a resource, and are just so supportive of women investors as well. They're very aligned with our mission, which is also a big part of what we stand for, not just a bunch of companies coming so they can, connect with you. They're really very mindful and intentional. So appreciate you, Anne Marie.
Thank you, Liz.
The recording will be getting sent out to all the people that registered, which we had a lot of people register. And also this recording will get sent out to our entire database. So with how to reach out to you in Quest. So thanks again, everyone, for being on. Anne Marie, thanks so much. I'm so excited to meet you in person in a couple of weeks.
Yes, likewise. Can't wait. It's going to be a blast.
I know. Can't wait for the sunny, air. You're used to the sun because of Texas, but I'm on the East Coast and it's like 50 degrees here today. So I'm ready for some sun. Thank you, everyone, for being on. I always like to say, with anything we do, take one thing and put it into action. One thing that you learned, one tip that Anne Marie shared, and do something with it. So that way that this time is spent well for all of us, because we don't do this just to hear ourselves talk. We're doing this to help move the needle on your financial freedom. All right. In a way that works for you on your own terms. So thanks for being here. Anne Marie, thanks again so much.
Thank you, Liz. So appreciate the opportunity.
All right, everybody. Have a great day.
Bye
Bye-bye now.